Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 13th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that we're seeing a bit of selling pressure here off of the all-time highs as core CPI and CPI data have come out, driving the market lower here ahead of the RTH open. Now what we're seeing at the moment again is another very bullish trend that has transpired here. We talked about seasonality heading into the 4th of July weekend here and in the week beyond it, and we've seen that come to fruition. One good pullback here provided a good bounce and a continuation, and so far this market continues to demonstrate a buy the dips structure. So again, despite the selling pressure we're seeing here this morning pre-market, we could find a point at which the market finds a low and we may bounce back. At that point, we could be looking at a return back toward the pre-market highs. Otherwise, a failure to hold the session's midpoint here, the previous session's midpoint, could be an early indicator of further weakness and perhaps a test at the previous session's low, if not a drive through it. So that will be under the most bearish circumstances. There is the failure to hold the previous session's low, which would open up a bearish outside day in some instances here. But again, all pullbacks remain buying opportunities until proven otherwise. All right, let's take a look here at the NQ. NQ right now down a bit ahead of the RTH open as well. Failed new high developing here, and a push back below the previous session's midpoint. We're now seeing a bounce back toward that midpoint, but again, a failure to stay above 14,836 could indicate an outside day down and some sort of additional selling pressure the rest of the session. But even in that case, look at the 8-period average here. That's the 8-period pivot-based EMA, and you can see every time ever since January here, or not January, ever since it pushed through the January FOMC key level in May, this 8-period average has been bid, and the few times it's closed below it, it has been a big time pushback above. Each and every time it has been an opportunity to buy. The last time we tested it last week, this thing bounced off that zone. So again, even if we were to sell off in the most bearish circumstance today, it may be somewhere just shy or just below that 8-period average, which could lead to another bounce down the way. So again, this market remains very bullish. If you look at the previous month's close price right there, that's also the previous quarter's close price. So far it has been bid, the retest has been bid. So again, it'd be failure to hold that level, which would open up a broader pullback down the road. All right, let's take a look now at crude oil. Crude oil right now down about 1/3% and currently inside day here, as price range is only 46% of average here over the last 10 sessions. You can see that volatility has certainly increased with crude oil. As a matter of fact, the 5-day ADR right now is 283, the 10-day is 232. You can see how the last 5 sessions here are more volatility, higher range days than the previous 5 here. So again, we're in an increasing volatility state here. This high and that low right there gave us a nice key range. We bounced back to the midpoint of that key range right here, and we're now consolidating right around the midpoint of that key range. There could be a great breakout opportunity coming pretty soon, and we'll have this key range to help us identify the next target, which could be as high as 84s up ahead based off a rough estimate here, 83, 84. So again, that could be the upside target. If we do break down and test this key level low down here, that right there could be a great trap for a continuation higher. So anything below 70 again could offer a tremendous trap and reversal to new highs down the road. Not saying we get there, but if we did, it'd be a great opportunity to watch for a trap. Additionally, this 3-day range is going to be nice to watch for a breakout fairly soon. All right, let's take a look here at gold futures. Gold right now seeing some selling pressure and then a bounce back here ahead of the RTH open. You can see that we've had a significant bounce ever since we had that failure, that lower low failure I mentioned we'd likely get a bounce and a return back toward 1800, and then that would be the key level. Could it get above 1800? Could it hold on pullbacks? Because if so, we could be headed back to the 1863.80 FOMC key level. You can see right there, that's the key level. It went offered. It tried for a lower low and got it, but failed. And what likely happens after that is an eventual return to that FOMC key level above. So 1863.80 still the upside target. Right here you're seeing a market structure here that is developing to the upside. So you have that, a failure here back to the upside, and now holding and creating new structure here, which means any test as low as 1780 or perhaps that 1773 half FOMC key level could provide a bounce higher toward 1863 down the road. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.